Federal Reserve has finally announced the interest rate remained 5.5%, the market including stock, metals, Bitcoin, even bonds markets had a remarkable rise in response. Is the real bull market coming? Should we be prepared to all in at the time? Disclaimer, I'm not a licensed financial advisor, nor I'm here to provide any financial analytics. Any information given here are purely for reference purpose. Let's first talk about the announcement of interest rate provided by Fed. Is 5.5% the figure should we be focusing or what? The market has given its prediction and action rate should have ended last December. We can see the market has been rising ever since, given the expectation was to get in as soon as possible before the rate cuts come. But when Jerome Powell gave a hawkish speech at Jackson Hole last August, he said rate hikes haven't ended yet, don't laugh so soon. That shocked the market and we saw a rapid fall in all risk assets including Bitcoin, crypto, and stock market too. It turned out the hawkish stance the Fed held didn't match the actions they took. I mean, look at the rate hikes, they weakened over time and kept getting delayed, not as threatening as their rhetoric suggested. This was predictable from data like their growing deferred asset. To simplify it, deferred assets actually means the finalized loss they've made has reached a highest record of most time, 120.6 billion, in other words. They made a finalized loss of 120.6 billion. Of course, this is based on the latest data on November 22 this year, not available at the time. But the record of Fed made a loss, the data was available as early as April this year if I remember correctly. Thereafter, we are seeing pressures on Fed having money to disperse to other government sectors, including the Congress. That's why we're seeing a delay on the Congress shutdown. Treasury went beast mode on selling bonds focusing on Q3 this year after the debt ceiling was risen. I think we have dragged too far again. Yet, given the speech delivered by Powell on June this year, once shocked the market again, pretending to be. There will be another 2 rate hikes within this year. You know, the market actually started the bet on when the rate cut starts rather than will there be another rate hike. Powell broke the hope of market again once, but it wasn't as surprising and shocked as is it before, based on the fall the market reacts. Because it's predictable the national debts of US couldn't sustain a very high interest rate. Nor it can intake the pressure of recession, at least for Mr. President's seat, given they are on a multiple route of wars at the time, including Ukraine-Russia in Asia and the recent one Israel and Hamas in Middle East. Therefore we are seeing a very weird phenomena. Interest rate goes up, risk asset goes up as well, the market isn't collapsing. But guess what? Japan plays a large role on this. Take a look at the M2 supply, while the whole world, most especially the Eurozone and US went huge on reducing the balance sheet yet, Japan and China. They both played the role of supplying low-interest loans to the market, Japan especially. Loans can be as low as 0.1%. Now how Japan could profit from it is interesting, but I think we've dragged it too far again. Given the stance we are having right now, most of the data analysts gave their assumption the rate cuts should start as soon as January. I think that's too optimistic, that doesn't make sense to the dollar circulation. A little conspiracy here, so I will skip it. But it's rather guarantee their rate cuts should start between the ending of Q2 and the starting of Q3. That's the time frame when the starting of refinancing of all financial assets including the treasury bonds come. They couldn't sustain a high interest rate. Imagine the interest rate they pay per year actually exceeded the budget spending on military. So what that could mean to the crypto world? Money has a very special characteristic, money, they pursue for money. Imagine you have a bucket of gold. I think it's nonsense since this is a finance channel, we're here for money most probably. Anyway, imagine you have a bucket of gold, you'd prefer to get another bucket of gold too, right? The attraction of having place your money in the repo market earns you a 5.5% interest rate risk-free money given by Fed. But what if Bitcoin and crypto-related stuff boom over 100%? What if It's rather interesting crypto market went into early bull than traditional stock market, that's kinda shook me a little. I bet many of them are ready for this, and I assume you all does. If you haven't leave yet, and you are ready to make money in the crypto world, this is the best time to research on value coins that have potential growth and expecting for AX 100 in the next 4 years. By the way, continue with the recent CPI and PPI data. These data now are no longer used for rate hikes projection, rather. It's used for rate cuts projection, like when, how much. We're seeing the recent CPI data remained what banks have predicts. With only month-to-month CPI in November grew by 0.1%. Side notes, actually. Food and energy are removed from CPI, so are. Anyway, continue with PPI, it performed better than expected from the rates given by the banks, bad for growth. Good for cooling down inflation. Based on these figures, the Fed might be projecting the rate cuts for, I shouldn't give my assumption here. But it's looking good. Actually, I was expecting Powell to be as hawkish as he used to be on the speech last night. But the market already gave its answer anyway. Money from the repo has came out, we're seeing commodities, golds, stocks, even Bitcoin has rises. This growth will be even huge when the rate cuts finally comes. Okay, this is the end. I will see you on another video.